Hello, and welcome to another episode of Strategy Stories. I'm Tudilan, and today we are diving into the strategy of one of the most storied financial institutions in Sri Lanka, Hatton National Bank PLC. HNB was established in 1888 to serve the needs of the tea planters of the hill country. Today, it is a systematically important private bank with a balance sheet of rupees 2.39 trillion. Today's episode is not going to be a lesson on the history of the bank. Today, we will take a closest look at the strategy story of HNB using the frameworks of Thomson, Gamble, and Strickland, from the strategy of vision to the balanced scorecard. The year 2025 was crucial for HNB as the Sri Lankan economy finally started to recover. However, the bank endured Cyclone Ditwa in 2025. Let us dive in and explore the strategy of Hatton National Bank PLC.
Every good strategy has a direction. Chapter 2 of our text makes clear that a strategic vision expresses the organization's ideas, where it is going, whereas the mission expresses who the organization is and what it does. HNB's vision is to be the acknowledged leader and chosen partner in providing financial solutions to inspired people. The bank achieves this mission by combining its entrepreneurial spirit, empowered people, and leading edge technology to exceed the expectation of its stakeholders. The vision statement is clearly externally focused on being a leader and partner in providing financial solutions. As indicated in the vision, HNB wants to become the largest private sector bank in Sri Lanka by 2030. This goal expresses the organization's strategic intent and is a stretch goal as it currently ranks second to commercial bank among private banks in the country. HNB's strategic intent is demonstrated through five strategic pillars that encompass the bank's strategic and financial objectives. The bank's strategic objectives include aiming to be the largest retail and SME bank in the country, and its financial objectives include aiming to achieve a specific return on equity and cost-to-income ratio. This mix of strategic and financial objectives is in accordance with the recommendations of Chapter 2 of the text. Now, the environment. Political and economic forces marked 2025 as a turning point for the industry. Real GDP grew at a healthy pace, credit demand from the private sector increased, and the trade with imported vehicle manufacturers reactivated. However, a cyclone damaged numerous households and small businesses across the central and southern parts of the country late in the year. Socially, the number of individuals without bank accounts continues to decline, and the younger customer base increasingly shows a preference for digital banking services. Technologically, mobile banking, digital payments, and the growth of fintech companies have emerged as the main forces for the change within the banking industry. Environmentally, the threats of climate changes has begun to impact the banking industry. Finally, legislation including the central bank's Basel III regulations and the Banking Act amendments provide banks with increased regulatory requirements to meet. Competitive intensity among banks is high. Commercial Bank, Sampath Bank, and Ceylon compete for the same class of prime bank customers. The entry of fintech companies and the expansion of mobile payment applications has increased the threat of new bank entries. Corporate debt and money market funds have become substitutes for banking industry and loan deposit services. Customers have increased in power due to the growth of digital banking, allowing them to easily compare bank offers and exit banking relationship with low cost. The power of bank suppliers has declined as abundant liquidity has reduced the cost of funds for the banks lend to loan applicants. Overall, the banking industry remains relatively attractive for banks with capital to expand into new markets. Banks must find ways to reduce their funding costs for both current and savings accounts to increase the quality of their loaned assets and to enhance their digital banking offerings to remain competitive. Chapter 4 explains that competitive advantages stem from resources and capabilities that pass the VRIN test. HNB's key resources include its brand and trust that has been built up over 137 years, an extensive distribution network of over 250 customer centers, and a mobile banking application, an expert understanding of small and retail business relationship, and strong capital strength with a Tier 1 ratio of 16.85%. Its weaknesses include a lack of geographical diversity, relatively high cost compared to digital banks, and interest rate sensitivity in its earnings statement. However, the bank sees opportunities in exporting goods and services, growing the SME industry, and leading the nation into the future in 2030, which outweigh the threats of climate change and fintech disruption. The Asian banker named HNB as one of the strongest banks in the country, affirming the strength of its resources. Well, in a case for broad differentiation with the best cost flavor in retail, HNB competes in all segments of the lending market and has focused on the quality of the services they provide rather than the cost of providing those services. The growth in their net fee and commission income testifies to this strategy as they have seen an increase 28.9% in this area of their business in 2025. The aggressive strategy to attract low-cost deposits allows them to lend at competitive rates. They have bagged awards for best retail bank in Sri Lanka for the 15th time and Euromoney's best bank for large corporates for 2025, which includes to the market degree of differentiation that the bank provides to its customers. The sixth considers the ways that a company supplements its chosen business strategy with offensive, defensive moves. In 2025, HNB went on the offensive. The most notable of these moves was shifting the bank's funds from government securities into lending to customers, which increased the bank's gross loans by 354 billion, uh, or 31% of the bank's total loan portfolio. This type of move is a textbook example of an offensive strategy that a company adopts in order to capture part of market recovery before its competitors. HNB appears to have also adopted a similar strategy for its digital banks such as TradeX and HNB Accept, which were launched before many of the bank's competitors began to develop their own digital platforms. Furthermore, HNB acquired another company in January 2025 when it purchased the remaining 50% of Equity Partners for rupees 6.5 billion. The sixth considers the ways that a company supplements its chosen business strategy with offensive, defensive moves. In 2025, HNB went on the offensive. The most notable of these moves was shifting the bank's funds from government securities into lending to customers, which increased the bank's gross loans by 354 billion, uh, or 31% of the bank's total loan portfolio. This type of move is a textbook example of an offensive strategy that a company adopts in order to capture part of market recovery before its competitors. HNB appears to have also adopted a similar strategy for its digital banks such as TradeX and HNB Accept, which were launched before many of the bank's competitors began to develop their own digital platforms. Furthermore, HNB acquired another company in January 2025 when it purchased the remaining 50% of Equity Partners for rupees 6.5 billion. Strategy is only as good as its execution. The message of Chapter 10. Three observations about HNB strategy. First, regarding people. HNB's commitment to inspire people indicates its continued investment in training and staffing. Second, regarding structure, the company has verticals dedicated to interacting with corporate, SME, micro, retail, and treasury clients, and it has centralized departments to manage risk and technology for the company, allowing them to make decisions about clients while maintaining centralized control over the company, the balance of which is described in Chapter 10. Finally, regarding system processes, HNB has a focus on improving the quality of its assets as evidenced by the creation of recovery units for high-risk loans, and the company utilizes a form of balanced scorecard to reward managers for achieving bank's strategic objectives in its strategic pillars. Now, the scoreboard. Gross profit after tax hit for 9.8 billion in 2025 with a bank level profit of rupees 45.4 billion. Group total assets grew from 312 billion to 2.39 trillion. Deposits grew from 246 billion to 1.96 trillion. Now look below the headline. Net interest income fell by 0.6%. The bank made up this falling rate with higher banking volume and that 28.9% surge in fee income. The net stage 3 loan ratio dropped from 1.88% to 1.09% with a stage 3 loan coverage ratio of 76%. The bank reversed 9.2 billion in loans and wrote off in stage 3 categories despite the cyclone over delays. The bank has strong capital and liquidity ratio. Capital adequacy is at 19.95%, against a minimum of 13.5%. The bank's liquidity coverage ratio is 227%. The company declared a dividend of rupees 20 per share. The voting share hit a high of rupees 433 per share during the year. Each of the four perspectives of balanced scorecard is green. The one item to watch is the interest income margin, since the market interest rates will stay low for the foreseeable future. So, is HNB strategy working? On the evidence of 2025, yes. Yes, HNB has a vision for the bank. It has a differentiation strategy and a group related but diversified banks that pass the better of test, and finally, it has the people, structure, and culture to execute its strategy to achieve record lending growth without sacrificing its commitment to lending to only those borrowers with good credit and sound financial positions. The challenges ahead are many, but if a strategy is a continuous race without a finish line, then HNB is ready to charge into the next race with full tanks of capital and a brand that customers and investors trust. Thank you for listening. I am Tudilan, and this has been a strategic review of Hatton National Bank.